Today's episode is brought to you by Kraken Pro. You'll hear more about them later in today's episode. As always, investments in blockchain technology involve risk, terms, and conditions apply.
All right.
What's up, everybody? Jonah, it's good to be sitting on your couch, I have to say.
The casting couch.
Let's not. We've got this beautiful bear here to symbolize our views, but it's a white bear. It's not like your typical bear.
Grizzly bear.
Because we think it's going to be a bit of a weird bear market.
Yeah. It definitely feels like one, doesn't it, though? I mean, this is not a bull market, is it? It's struggling to rally. And I think what I want to hear your take on is basically I'm thinking it gets a little bit weird in the rest of December, de-risking, tax loss harvesting, maybe CTA is just pushing markets lower because nobody else is doing anything other than protecting P&L. And then January is when we can maybe start actually trading again. But for now, it's just going to be like random price action for the next 3 weeks.
Yeah, I think that's unfortunately true. I mean, I got bullish. I got bullish at the beginning of December, like end of November, basically on that massive crash. And I thought that we could get a nice little bounce to, 105, 110. We could really rally up. Maybe ETH would get to 3,400, 3,600. And I think what I've realized is that we're sort of in the decay mode right now, unfortunately, where I thought that the first 2 weeks of December, maybe the first 3 weeks could be good. But the closer that you get to the end of the year, if prices are down, people are going to be selling to harvest those tax losses. That's the thing. And it happens. I mean, I remember this so clearly. Post FTX, the actual pico bottom of the market, where everything sold off ridiculously. Like I remember Solana trading to like $7. It's like the last 3 days of the year. It was all the last 3 days of the year because every fund, every person took advantage of the fact that there's no wash trading rule in crypto. And so you just sell, you collect your losses, and then you immediately rebuy in the new calendar year.
That loophole is still in effect, right?
Still in effect, believe it or not.
Wow.
So that's why I think people should be aware of it. And if you're trying to trade, maybe take the last week of December off, or short, into the last week of December. Because I do think, look, there are a lot of things that are down this year. Basically, the way that I think about it is the more down it is, and the more unrealized losses that you think people have on this coin, the harder it's going to fall.
Yeah, and so I guess in terms of unrealized losses, man, there's a lot to think through here. But I guess first, let's talk about not trading when trading is too hard to do. So you and I have been not Bitcoin maximalists, but just kind of like basically heavily advocating for this being the cycle of Bitcoin since we started the pod. We advocated GBTC. It was all about the ETF trade, the macro upswing, the thesis. Bitcoin had the best risk reward on the board. We've sort of advocated for not being like 10% Bitcoin, 90% altcoins, like 100%. If anything closer to the opposite. And so that's still kind of how I'm set up in my, just giving Icy the polar bear a little scratch there. I like it. Yeah, basically.
It's really cute. I'm not going to lie.
Yeah, this is my childhood bear.
This is your childhood bear?
Yeah, he gives great hugs. Give it a try.
Hold on.
If you're feeling a little bit like sad about the market, now put the arms around your neck.
Oh, arms. Okay, hold on.
Put the mic down and. Yeah, but he gives good hugs. It's the kind of fuzzy bear you need in a bear market. His name's Icy. 15 minutes of fame here. Yeah, basically what's going on is I think I've kept a relatively small allocation to altcoins this whole time because of our general views. But I think that, oh man, the comments are getting ridiculous.
Yeah, these are good. There's one comment in there I want to address just because I think it's important. And it's not the casting. It's not the casting. Jonah, it wasn't the casting couch one.
It's not the casting.
That was the one that I wanted to not talk about. It's the guy that has the username Suka Bliat. That's a Russian curse.
Yeah, horrible curse, actually.
Oh, yeah. What's wrong with you, man? Change your name. That's very, very, very offensive to Russians out there. Anyway, so Suka Bliat says, didn't 2017 BTC peak in the end of December? And guess what, Suka Bliat?
Bliat.
The Russian language is a tough one. That is true. It did peak at the end of December. But the difference between 2017 and what I was talking about 2022 and what we're talking about here is that BTC was down in 2022 and 2025 so far. In 2017, BTC was up massively. So there was no incentive. There was no tax loss to harvest. It's only when things are down that there's a tax loss to harvest, right? So like just super quick thought, just example here. If you buy something at $100 and it goes to 150 and you sell it, you owe taxes on it, right? You owe $50, you owe 30% or 35% or whatever short-term capital gains is on that $50 of gain. If it goes down by $50 and you go from $100 to $50, you can take that as a loss and basically write it off against other gains. And so what that means is that there's an incentive to not sell if something is up at the end of the year. If you think it's going to go higher, there's no reason to, like, you don't want to incur that tax loss, or you don't want to incur that tax bill. If it goes down, there's an incentive to sell and then rebuy back if you think it's going to go higher. Now, in the traditional markets, there's something called wash trading, where if you sell something and buy it within a 30-day period, the same asset, then you maintain the same. You still owe, I believe, taxes on that.
There are loopholes to that, though. Like you can sell the SPY S&P 500 ETF and then rebuy the Vanguard one that does the exact same thing, you know, within seconds, and you actually benefit from the harvest.
That's true. There are loopholes, but like for example, a single name stock.
But in general, yeah, you're absolutely right.
Like single name stock, like you can't sell Robinhood at a loss and then buy it back and then claim that loss against your income. Not going to work. Crypto, because it's still not regulated, it's you can do that. There's no what they call no wash trading rule, which means that there are all these weird things that happen towards the end of the year with respect to crypto, especially when it's down. And so one particularly good strategy for you, the young enterprising listener, might be to go look at what is down the most that you think this is, I think, mainly a VC fund or like hedge fund thing, because retail tends to buy and sell a lot. So the cost basis comes down as the asset goes down. But if there's anything out there that you think people are sitting on large unrealized losses on, like a TIA, for example, maybe that's a good short in the end of the year.
Yeah, it's a good idea. I did my own fair share of tax loss harvesting already by getting rid of the CryptoPunk. You know, you live in a high tax jurisdiction, it's a good time to tax loss harvest, and many people do. So yeah, tax loss harvesting is going to happen. Another thing that happens in traditional markets.
What happened to that CryptoPunk? Can you share the full trade with us?
Yeah, sure. So I bought it in sort of the peak in November of 2021 because I thought it would, you know, I liked it. I wanted an avatar. I thought avatars were sort of an amazing new innovation for the digital world. You know, people are terminally online. Your avatar is kind of your online character. I love this CryptoPunk. I thought it was super cool. I thought, you know what, I only need one NFT. This is, I'm going to go large. And also the reason why I bought it was I'm not the kind of trader who learns very much from like mistakes on tiny size where I lose, you know, $1,000. Like I kind of need to, after many years of institutional trading, I kind of need to feel feelings in order to learn stuff, you know? So I just thought this is definitely going to be, you know, I'm probably making a mistake, but I'm going to learn more from this than I will from any other big crypto transaction. And I didn't think it was going to go straight to zero. I sort of had this feeling that CryptoPunks would endure across multiple cycles. So I bought it for, you know, it was, let's just say that it was, I didn't just buy it with cash that was sitting in my checking account. That money was already in crypto. So my cost basis was lower than what it might look like on CryptoPunks.app, but like a lot lower. But at the same time, it was still, you know, a big ticket purchase. And then I guess what happened over time is two things. The first is I liked the punk less and less as time went on. Like some art that I have, I never get tired of. I like it more and more as time goes on. Other art, I just get sick of. And this one was falling into that category. Like I didn't enjoy it.
Why did you stop enjoying the pixelated version of yourself? Because I'm curious about this. Just I want to interject something. Most people tie their identity to their CryptoPunk. Did that not happen to you? Like,
No,
you feel
no,
like it was you.
No, I didn't. I didn't tie my identity to it. If anything, I felt like it was forced. You know, I felt like I was trying too hard to be crypto cool, and crypto's
no longer cool, Joe.
I don't care. It was never cool in my circles. It was more just like it felt like I was trying too hard. It didn't really feel like me. Yeah. I wasn't like 6'5", 2'9", who I didn't become the punk. But even then, like I still thought it was a cool looking avatar. And then, so one, I got tired of it. Two, when you're tired of a piece of art, it just becomes a trade. It's nothing. There's no like emotional connection to it anymore. It's like, am I going to make money holding this or should I get out of it? And the cold hard reality was that if I ate this large loss now during this year, when I have other gains and I live in a high tax jurisdiction, I basically get back 40% of the loss, and I get to recover, whatever I sold it for, 200 grand. So it was basically like a $400,000 liquidity event for me that would have been locked up holding this thing. And I think what I realized, just, in terms of thinking about punks as a trade, Bitcoin has rallied, 500%, and CryptoPunks are down 70, 80%. And I think what that tells you is, while CryptoPunks will always be part of like a niche community part of, crypto thing, it was very much a 2021 meta. It's not like punks are just punks are crypto. Maybe Ether rocks are crypto, but like punks aren't. And realizing that made me think like, okay, why sit through this for another cycle? There's just too many punks. There's 10,000 of them. There's always going to be somebody like rage quitting their punk, harvesting tax losses for very reasonable, reasons. And I just don't want to sit on this anymore. I'd rather have the 400 grand to put into Bitcoin or Hyperliquid or Aster or something else.
I think if there's one thing that I've generally learned about crypto is that once a meta is over, it doesn't really come back in a sense, right?
Interesting.
Like once the ICO boom is over, like ICOs didn't really come back. Once DeFi exploded in 2020, DeFi has never come back. NFTs exploded in 2021, they never came back. I think that like what ends up happening is, like, for example, NFTs, if you look at the broad market, there are a few that are up. Pudgy Penguins did pretty well. I think Miladies did pretty well over the last like 2 years. But the vast majority of things trended to zero and stay at zero. So like when you're in the middle of a meta, you should, if you think it's a bubble, you should probably understand, like, once the bubble pops, like that specific sub meta is probably not coming back. The only thing that keeps coming back is Bitcoin, Ethereum. Like that's it. Like those are sort of the only two things that keep coming back. Like even if you look, okay, like look at the L2, the L2 trade that happened in 2020, 2021, never came back. So I guess when it comes to NFTs, people will always ask me, will NFTs make a comeback? Like I don't think we're ever going to see what happened in 2021. It's just never going to happen again. But that doesn't mean that every NFT is totally useless and is going to go to zero. It just becomes like, it's the equivalent of asking, will art come back? It's like, yeah, like
some art, like not all art. It's like asking, will oil paintings rally again? Like maybe some of them will, but 99.9% won't.
Yeah,
and
will Picasso's ever come, like, explode like they did, post his death? I don't know.
No, maybe not.
But some will.
I mean, I think what's going on here is like society for now prefers physical art to digital art. It's just that we're not so terminally online yet as a species that you need to have like an incredible digital art collection and live in basically like Ready Player One style, like live in a shipping container in a junkyard in real life. No, your digital presence takes far less priority than your physical presence still. And maybe that'll change in 20 years, but I don't want to ride my punk to zero in the meantime, unless it's like something that just makes my heart feel this emotional connection, like maybe some physical pieces of art that I have, you know?
Look, I think there are certain things that are just always going to be better in physical form than in digital form. Most things that's not true with. Most things have transitioned to digital form, and now, and basically anyone below the age of 30 lives, like, their entire conception of reality exists in the digital world. All of it exists online. It's their everyday interactions, where they get their dopamine from, where they spend their time is the online world, and then the online world itself translates to the physical world. Like if you meet somebody that's like 27 years old, 26 years old, and you talk to them, they
do you do that, Avi? Do you know any of these people?
Well, I'm 30, I'm not that far off.
Tell me about them.
Let's just say I've met some people in the last call it a few years of my life that are younger than me, and they're just terminally online. Like these like making references to things that happen on Twitter. Like their life exists online, and then when they come into the real world, they discuss the online happenings, right? And this is maybe it's just because I'm around so many like crypto neats that this is the case, but it also is true among like more increasingly true among like random people that I'll meet in New York. We'll have this mentality towards the world where they work, like their entire work is online, their entire basically every facet of their existence is online, and when they come to see you in person, they are bringing that online self to you. Now, what that means is that relationships, work, content in terms of reading and writing and communication has all moved online. But there's some things that you can't replicate, right? Like
the flex is still offline. Like having an NFT is not a flex anymore. What's a flex is like, I've done so well in my career that I can bring you into my large house, or my, check out this sweet car that I have, or this wonderful piece of art, or this instrument. It's not, look at this NFT that I've made my Slack logo at my hedge fund that I work at,
Correct. And yeah, not a flex at all. Although at some point NFTs were, I remember when I first bought my Ether Rock, which I still own and I still hold. I'm getting offers for it.
I think the Ether Rock, it's the first NFT. That one will persist.
It's also just,
how many are there?
There are only 100.
Yeah, that's the difference.
There are only 100 of them. They hit a peak of 3 million a rock, which was totally insane. I don't think we're ever going to get back there, but I could see $1 million, $2 million a rock at some point.
I could see that
at some point in the future.
Tell us the story of why you bought that while we're talking here. This is so much better IRL, by the way. Speaking of physical, this is fucking great.
It's so good to be here. And Jonah, you got a beautiful house.
Thank you.
It's nice to be out in LA, out of my little cramped little New York apartment. God, out of the 35-degree weather into the beauty of
Should LA. We open a door here? Like the weather's beautiful out there.
Yeah, we can.
Let me do that. Keep going. Keep opining here.
But on the Ether Rock thing, I've talked about this on other podcasts, but I think the core of it is that it's a community at the end of the day. And so I don't even view it as necessarily a piece of art. I view it as an access ticket to a community of some of the most interesting and successful people in the industry, because like, who is spending $300,000 on a rock? Like who's doing that? It's basically people that can afford to. So that,
well, the punks Discord was supposed to be like that, but it's a dark place. It's a dark place.
The issue with the punks is that there are 10,000 punks. Not everybody bought into it as a high ticket investor. Some people bought into it as a low ticket investor, and I think that things kind of like groups stop working, in my personal opinion, above 60 people. Even 100 is kind of pushing it. Like 100 is workable, but it's very difficult to have a cohesive culture and also have individual relationships with every member in that group. Once you get past 100, once you get to 500, everything's an abstraction. It's an abstraction.
Zuckerberg used to talk about this. He had some comment about that, about how like we've done studies that say that a human being can only have 100 close friends, but Facebook allows you to scale that to 10 trillion.
Dude, if I closed my eyes, I might actually think you're Zuckerberg.
my impression isn't that good.
Can you say, so I killed this goat myself and you're going to be eating it?
No, I'm not going to say that. Go on though. So, okay, basically communities don't scale. NFTs, crypto is a great community coordination and creation mechanism. And NFTs are one iteration of that. So I guess your point, Avi, is that like the NFT community has to be small, otherwise it's not going to be effective. Is that kind of what you're saying?
I think that's 100% correct.
Okay.
Sorry, I'm just retweeting. I gotta get more people on this live.
Come join us on the live stream, the bearish couch, the bear couch.
This is the bear couch. We're gonna take a second to get more people on, because this is fun, man.
This is great.
This is really great. Let's see, live from LA. Jonah and Avi on the casting couch. There we go.
These are my quants. This is hilarious.
It's so good. If Jonah is so smart, then why does he hate Florida?
Let's talk about that.
Why is Florida is the equivalent? How do I put this? If you can't make it in LA and you can't make it in New York, and you have a sub 100 IQ, then Florida's a great place.
You ever played the Florida Man game? Do you know the game?
Yeah, it's a great game. It's a great game. They just like consistently do the craziest shit down there.
No, it's basically what you do is you Google Florida Man and then the date of your birthday, and you see what horrendous Florida Man article there was on your birthday.
Oh, really? No.
Yeah.
I haven't done that.
We should do that later in the podcast.
We can do that later.
Mine is like Florida Man, something about tries to take on alligator and loses or something.
First of all, I think it's actually a sign of intelligence. Would you rather be hot or would you rather be cold?
Cold, because you can put on a jacket.
100%. So I would actually much rather live in a place that sometimes is 35 to 40 degrees than live in a place that during the summer
there's literally nothing
like
you can do.
You just have to sit inside all
the
day.
Summer starts in March and it ends in November.
Horrendous.
There, it's so bad.
Like,
also, the flying cockroaches. It's below the Tropic of Cancer. Like that weather, that level of humidity and heat cooks people's brains. Like
it makes you less intelligent. It makes you slow.
Yeah.
It makes you lazy.
Makes you
angry.
Yeah,
okay, maybe okay, yeah. It's and first of all, also Miami's very ugly. This is just my take in general. Miami's like actually not a pretty place.
No.
And also the quality of people in Florida, I think, while changing, it is changing. There is a lot of improvement happening there because hedge funds are moving in, and smarter people are starting to move down there, mainly because of governance issues. So it's really a governance thing at the end of the day.
Yeah.
So that's slowly changing. So you know what? Look, but the bare bones of it, like every time somebody tells me about why they like Florida, I'm like, you like Florida for the wrong reason. There's only one reason to like Florida.
Taxes.
And that's taxes and governance.
Yeah.
Those are okay, two reasons. Taxes and governance. If you like Florida for any other reason than that, like you're cope. That's like pure cope. Like the weather is not better than New York weather. I'm sorry to tell you.
No, it's worse. It's way worse in Miami than New York. I agree with you.
Oh my God, I'm so cold. Put on a jacket.
Yep.
Go and buy a down jacket and walk around, and you'll be completely fine.
Now, what I will say is like, I'd get it when people move to parts of like a great friend of mine moved to Jacksonville and he's from Sarasota. I understand when you move to like a dirt cheap, incredible beach town, if that's your thing.
For sure. Or like Destin is actually like a very, very nice and cheap. If you're moving for like quality of life and like, okay, I make 150K.
I'm going to live in Fort Lauderdale or some random
Tallahassee.
Tallahassee.
Fort Lauderdale's not so bad.
My uncle lived in Tallahassee for a long time and I went to visit him. And aside from the cockroaches that like live in the toilets and then fly out at you when you open the lid, like real jungle shit.
Yeah, that does happen.
It's like for like a very low price, you can get a nice kind of beachy or jungly life if that's your thing, if you're in that little niche. But the people who are like, oh, I'm delighted to pay $8,000 a square foot to live in like some third tier neighborhood in Miami. I don't get.
Maybe all of this is just Miami hate at the end of the day.
Yeah, it's just Miami.
I think this might just be Miami hate, but also it is hate among the people that look at me and they say, "How can you live in New York? It's so cold."
They say that about me too. They're like, "Well, LA is so much worse than Florida." I'm like, "Why? It's better in literally every way except the taxes and governance." And they're like, "Well, yeah, but taxes and governance." Like, "Well, fine, whatever."
Have you considered making more money?
Yeah, just move to LA. LA is the best. New York is also the best. New York is bester, actually. I think New York is.
I mean, New York is just better for single people, for people who are looking to have a little bit of fun. LA is much better for families.
Yeah, for kids.
And what I'll say is that so my grandmother retired to Boca Raton, or my great grandmother actually retired to Boca Raton. And
it's where all Jews
that's
go
just
to
like where all
end their
old
lives.
Jews
Yeah, exactly.
go to retire and go to die. And I do like Boca, but for like stints, for a little bit. The one thing that I'll end this Miami hate train on is that if you're old, you like warmth. If you're old, you can't deal with the cold because then your joints ache and they creak and it's hard to move around. So like once you hit 75 years old, by all means, love Florida.
Yep.
By all means. But prior to 75, if you like Florida, I'm going to question you.
I 100% agree. Somebody just wrote worst casting couch episode ever.
Yeah, I'm sorry, guys. This is not going to be.
It's not
going to be one of your normal episodes.
No, it's just a couch episode. It's not a casting couch episode.
Just normal couch.
Just a couch.
We have a divider.
This is our victim.
He's
yeah.
Richard Hart, our floor. Okay, going back to actual trading and investing.
Yeah, we should probably talk about that stuff.
Which is important. Any TradFi tickers or metals you would be. I'm still ridiculously bullish on Robinhood. I think that this is like this is a no-brainer trade for the next 5 years. I'm also still very bullish on Tesla for the robotics thesis.
It is the only clean way to get exposure to that.
Currently the only clean way to get exposure to it. The only thing with Tesla is like Tesla's one of those things that if you told me that Tesla drew down 50%, I wouldn't be surprised because it doesn't have like this is what we were talking about before, right? So Google has cash flows. It's trading at a pretty reasonable price to sales ratio. Tesla is just totally out of whack. Just like completely out of whack.
Tesla's Bitcoin. Crypto educates you on how to trade Tesla, how to ride that.
If you want exposure to the robotics thesis, Tesla is doing well, and I am very bullish on equities for all the reasons that we discussed on the last podcast. I mean, Trump. Here's one sort of thesis I was thinking of is, look, Trump knows that he needs to support the stock market. And so we both agree he's going to support the stock market. He wants a new Fed chair in. He wants to cut rates. He probably wants to expand the balance sheet. He wants to continue to spend money. And he probably doesn't care what happens after the 4 years. And so he may take steps to radically increase inflation in the United States over the next 4 years. Dollar goes,
just mortgage our nation's future for his own glory.
Just mortgage our nation's future, and that makes me very bullish on commodities still.
Commodities have an issue. Okay, and this dovetails nicely with our buddy Santiago's tweet about valuation models for ETH. Is ETH a commodity? Is crypto a commodity? Like, let's talk about commodities for a second.
Okay.
I want to get your take on all of this. So the first is, will commodities roof if Trump does some sort of inflationary stimulus measure? And the answer is not necessarily. It's way more complicated than that. Like, I would not get bullish the GSCI or the BCOM, which are the two big commodities indices, if I knew that stimulus packages were going to hit the market, especially retail stimmy. And the first thing you do in that scenario is you buy Bitcoin, or maybe you buy the NASDAQ. Just stuff like, or you buy Tesla, things that are disconnected from some like valuation model, but are a bet on the future that retail can access. Bitcoin's a bet on alternative reserve currencies. You could bet on AI stuff via Google or the NASDAQ. You can bet on humanoid robotics via TSLA. I think commodities would be the wrong bet. You might get lucky for 20%, a broad basket of commodities has this issue, which is that this in commodities, the solution for high prices is high prices, right? Production will come out of the woodwork for most commodities.
Isn't that just an argument to buy miners, to buy commodity miners, to buy copper miners, to buy?
Like we've talked about this a
uranium
lot.
miners?
I think yes, you buy miners as opposed to the raw commodity and the BCom, but like miner stocks always seem kind of accused. I don't know why they trade at such
very
low
well. Okay.
multiples.
So
I don't know the space well enough to definitively say whether you buy miners or not.
maybe you're right on broad basket commodities, but I do think Trump is offering us specific opportunities to make investments in things that are very clearly in the interest of national security, or in his interest, also buoyed by potential inflation. Trump gives us trades pretty regularly, which is kind of nice.
We're gonna get one next year, I think.
I think we're gonna get. So, for example, when he took a stake in Intel, it's like kind of a no-brainer looking back on it.
Wink, wink, nudge, nudge.
Like,
Buy the
you,
Intel.
You should probably buy some Intel, and they sign contracts with the U.S. government. He keeps talking about, well, China has basically started a soft war over rare earth minerals right now. And so one of my larger positions is in an ETF called REMX, which is a holding ETF for all of the US-based rare earth mineral companies that I think we are going to have to support in order to fight this war.
I like that one.
So I'm super bullish on REMX. I have, I think, 5% of my portfolio in it.
That's a real trade right there.
Yeah, I mean it's a serious trade.
The reason why we're talking about these ETF trades though is because it feels like, going back to what I was trying to say at the beginning of the pod before we got digressed into the Florida space, is I'm not really, we're mostly in Bitcoin and crypto.
Mm-hmm.
What little altcoin trading I've done this year outside of Hyperliquid has not gone well. Like I haven't, like just being honest, I haven't really done that well trading alts in this environment, which has kind of been quasi bearish, leaking lower, just quasi. I'm going to rub the nose here. Quasi bearish. Basically, I do. I need a hug. So basically, when you're not seeing the ball well in any market, you're supposed to take a step back. You're not supposed to trade more or trade frantically or play on tilt. You're supposed to hug the bear, take a step back, and
embrace the bear.
Embrace the bear. Let the bear embrace you, and reevaluate. And what I'm realizing here is like, until crypto gets serious uptake, these valuations are going to be unsustainable, and the only good altcoin trades are going to be those dangerous things that never worked in the past, shorting alts like Aptos versus Bitcoin. And so aside from that, since we're crypto traders by, just emotionally, we like to get long things. We don't like to get short things. So our favorite altcoins right now are outside of crypto. They're like REMX. That's basically an altcoin Trump trade. A Trump trade that I like is just being long Bitcoin as next year rolls around. And he's, Hassett is ridiculously bullish crypto. The market doesn't understand that. The market isn't pricing that in. I'm a little worried that the market is pricing in a bunch of stimulus next year for Trump to kind of like bail himself out of a bad midterm outcome. Like if that doesn't happen, if Trump doesn't deliver on that, I'm worried about the downside, because there's definitely something priced into that.
I think the midterms are the number one threat in my mind in terms of the market, because the market, I think you're 100% right, is leaning a lot on Trump's ability to guide it. And if the midterms come back bad, then just logically Trump's agenda is going to be much tougher to implement.
Yeah.
The only thing that gives me a little bit of pause, and this, by the way, this isn't me being a Trump supporter. This is not a good thing, actually. But Trump is acting extrajudicially in a lot of different ways. No, like outside of the system.
Oh, judicially.
That's what I said.
Okay.
You said judiciously, which I don't think.
No, you said judicially, and I said, and then I realized you meant extrajudicial, like
That's
outside of the.
You missed the extra.
Oh, okay.
Chat, back me up. I did say extra. Definitely said extra.
Fuck.
It's okay, Jonah. You don't listen, man. Wait. Do you pronounce buoyed as boo? What? Get out of our chat.
Booed? No, it's buoyed. Buoyed. He didn't say it.
No,
Oh,
what are you talking about? I definitely said it.
I love streaming.
Maybe Jonah was right. I said it in my head. Anyway, he's acting outside of the justice system. He's acting outside of the confines of, what theoretically should confine the executive branch. And so it's actually very possible that he does end up implementing an agenda and moving forward with things, even if the Democrats control Congress. Because the reality is Congress isn't doing anything right now.
They haven't done anything since, I think the last sweeping piece of legislation that got done with the 60 vote beat the filibuster margin was Obamacare. To me, what was that, 2012? It feels like that Congress has basically been doing
Crazy
nothing.
thing is Obamacare sucks.
Yeah.
By the way. I'm navigating the insurance world. I actually just recently, thank God, got insurance because I'm self-employed. I had to go to the New York marketplace. I had to go look for insurance, and it was all very complicated and ridiculously expensive. I'm paying like $1,000 a month for minimal coverage.
Don't even get me started on what it takes for the family. It's crazy.
Like it's insane.
Yeah.
Oh my God. Yeah, I can't imagine. So you also had to go through a private broker.
Yeah. I don't understand why it works this way. Like in France, my wife's French, like we spend a lot of time there. You literally just go to the dentist, the doctor, the eye optometrist, whatever. And at the end, you like have this green carte vitale health card, and you just swipe that and it's all free. Like there's no upfront cash. There's no negotiating with brokers, and the price of everything is rational.
Look, our system, unfortunately, is the worst of both worlds, where it is a heavily regulated industry that isn't fully government run and isn't fully comped, but isn't fully capitalist. And so you end up in this absolute Frankenstein labyrinth of, well, there are some parts of this that are government run and some parts that are private, and the insurance companies exert power and the government exerts power, and everyone's just fighting all the time. And there's no actually good system here. So, which is also, by the way, if you're bullish on dysfunction in the insurance world, go buy United Healthcare. What a chart on that one. It just sold off like crazy, actually.
Really?
Yeah. I gotta pull it up, but it had a huge drawdown.
There are some charts I wish I could get long, but I can't. Like fines, government fines. That's just up and to the right. M2 Money Supply is a chart you can get long now via Bitcoin. I still think that holds.
Yeah, look at that.
Healthcare dysfunction. How do we get long that?
United Healthcare went from $600 to $324 this year.
Sounds like a buy to me.
And 324 is basically where it was in 2020, right before that massive run up. So I actually think this is a pretty good place to get back in if you're bullish on healthcare dysfunction in the United States.
I'm bullish on healthcare dysfunction.
It's funny. I mean, I guess Luigi had some sort of impact.
Yeah, that guy. He's kind of a folk hero, isn't he?
He is a folk hero. It tells you about our times. Our times being consumed by populism, which is very good for trading.
Yeah,
because it's gonna look. For a long time, trading was very boring, actually. And you would know this better than me, but I heard it from all my mentors, like from the period of 2012 to 2020, like that 8-year period. It was fine. It was like
oil was fun, but like broader markets were not.
Broader markets were just, there were like little things here and there. Basically, 2020 to 2025 has been Twilight Zone, absolute insanity, tremendous volatility. I can't believe this is happening every 3 months. And basically for 8 years, you didn't really have that.
Yeah. I mean, basically from the end of the financial crisis up until COVID was a real dud. But now, it was kind of like the nothing ever happens era, end of history. Now, okay, so let's talk about populism for a second. And this ties back to crypto. So I think that AI is going to disrupt a lot of jobs, not a controversial view. And that's going to be bullish the stock market because companies will be able to get away with earning the same profits with fewer people. Because instead of hiring McKinsey and an
also
army
means that the stock market has never been less representative of the overall economy.
Yes. So 2 things. First is, I think here's the trajectory. First, the stock market rips as companies become more efficient and earn a higher return on shareholder equity. unemployment starts to tick up, social unrest starts to tick up because you can't just be a middle manager on Zoom anymore. You got to actually do something really unique. Otherwise, you're getting replaced by the Chat GPT or the Gemini. Then basically the army of unemployed white collar people, there's no job for them to step into. They just get upset. They start to demand things of the government. And then you have basically low inflation, rising unemployment, rising stock market, social unrest. That's the best recipe that I could possibly imagine for stimulus, because the government will want to placate these people. Then you start to see stimulus, subsidies. It may not be like direct checks into people's bank accounts like during COVID, but it could just be like subsidized groceries, all sorts of random market interventions to tackle the affordability crisis and the unemployment. Rates will come down. I think that's the most, like, I think if you look at Twitter right now and people getting all upset about Bitcoin because they're not getting rich quick anymore, I think that this is literally on a very medium to long-term basis, like the setup is stupidly bullish because of that. It's going to get rocky for a while though. And the big risk is that the administration pivots to doing something for Main Street at the expense of Wall Street instead of stimulus, which is bullish.
I think that's inevitable, unfortunately, because I mean, you see it with Zoran and Trump coming together and having a collegial relationship, even though Zoran calls him a fascist and Trump calls him a communist, and they're at each other's throats, and it's like the perfect example of horseshoe theory. Like, I've never seen horseshoe theory quite as good as that, where they both agree on helping Main Street. Like and on some parts they agree on how. So for example, the building in New York, Trump wants to build more housing, Zoran wants to build more housing, right? Like, they do genuinely agree on some topics. It's like, it is horseshoe theory. It's kind of crazy. The only thing, obviously, is that I think it takes a while to get there. You know, so what?
Basically, like, stimulus would be bullish for Wall Street and for Main Street. What would not be bullish would be, we're going to start penalize or like capping profit margins for grocery stores, or we're going to start punishing, like, we're going to start taking energy companies' profits and like dividending them out to average, unemployed people or something. That would be bad for Wall Street, good for Main Street.
Correct. And I think that, well, part of what Trump is trying to do with the whole Trump account is to encourage Main Street to take advantage of Wall Street, right? Is let's have Main Street get access to all of the profits that Wall Street is making, and that's by encouraging people to actually put money into.
Yeah, but what Trump doesn't understand, like, yes, basically Trump has kind of,
by the way, super bullish,
so bullish,
like that's just it's like more money just flowing into the system over time that's forcing itself into the system is amazing. One criticism that I heard about the Trump account is that, oh, well, we already have 529 accounts. Like, we already have these accounts that you can open for your children, and people don't understand it's a marketing play.
Yeah.
How many Americans do you think that wouldn't already give their kids a retirement account in the next 5 years would open a 529 and give their kids an account, right? Very, very, very low, like very, very low percentage. I guess that's tautological, but it's very, very low percentage. Whereas Trump comes out and says, we're going to gift everyone $1,000. Everyone knows that if you're gifted something, you look into it. Like, the way that I used to get people into crypto was I'd send them a little bit of Bitcoin. I'd send them like $10.
Interesting,
right? Like, I'd send them like $10 a Bitcoin. I'd send them $100 a Bitcoin. I'd send some Ethereum over, and I'd show them how to. I would open an account for them, and I'd show them how to do it. And that simple act of opening an account and putting some money in is going to lead to so much more investment in the stock market from your average person in this country. It's unbelievable. And the fact that people don't get that, it's kind of crazy. Yeah,
it is nuts. I mean, also, when he's saying I'm basically the American savings account, I forget what it's called. Basically what he's telling people is, wink, wink, nudge, nudge, guys, the dollar is over. Like, the new denominator for anybody's net worth should be the S&P 500, basically the collective net present value of 500 American value producing entities. And I think what's crazy about this, I think what Trump doesn't understand, because he's a rich kid, lifer who had everything out of a silver spoon, is, okay, fine. Let's say somebody gets gifted $1,000. Like, anyone below the median is going to just liquidate that and spend it on what they need.
Well, they can't liquidate it.
Oh, I see.
It's 18 years. You can't touch it for 18 years.
Okay, but they're going to turn 18 and they're going to liquidate it and spend it on what they need. Meanwhile, like, basically what I think Trump is misunderstanding with this whole communication, this sort of soft nudge to the world. He's been doing it since he got elected the last time in 2016. Like, he's basically been talking the stock market. Everything he does is about the stock market, making the stock market higher, new all-time high. Look at me, the Trump trade, the Trump rally. What he doesn't realize is what the point that Peter Thiel made. A lot of people just have negative equity in their lives. And I'd say most people below the median net worth in this country have basically negative day-to-day equity. And that the reason why this is a problem is because the stock market is only like a denominator for your money, is only useful if you have money. And so I think the biggest thing that he could do to stimulate the economy would be to basically somehow do an extrajudicial move, basically force universities to pick up the tab for student loans, like just wipe student loans instead of it being the federal government like paying for it, which is what Biden did. Under Biden, there was the whole meme of the plumber paying for the gender studies major's student debt. I think Trump has talked about having, Harvard and Yale and Tulane and everywhere else.
I mean, if you look at the endowments on these,
yeah, they're huge.
They're massive.
Basically, release that capital into the economy by wiping people's student debt. Allow those people.
Sounds a lot like communism, Jonah.
Yeah, but you're redistributing instead of redistributing from public equities to struggling individuals, you're redistributing from private nonprofits.
That's communism.
It is. But I think, to your point about horseshoe theory, Mamdani wants to take Procter & Gamble's profits and give it to, the average working Joe. That's going to torch markets and make Main Street happy, or billionaires' money. Take it away from the billionaires and give it to the, instead, what if they just hit the university system? That's what Trump on the far right is saying.
You know what? We'll come back to that point after we hit our ad break.
Oh yeah, we got an ad break.
we forgot that we have sponsors.
If you're an eligible US trader looking for an edge, Kraken Pro is the only crypto exchange offering margin trading in the US. Qualified traders can tap into 150 plus margin markets with up to 10 times leverage on select assets, using Bitcoin, Ethereum, USTD, and more as collateral. Plus, you get real-time risk tools and Kraken's signature deep liquidity all in one trusted platform. Check out Kraken Pro and see if you qualify at kraken.com/features/margin trading. Crypto trading involves risk of loss, and margin is not for everyone. Margin services are offered to U.S. customers through Payward Interactive, Inc. For full disclosures, visit kraken.com/legal/disclosures and review Kraken's margin disclosure statement. The machine economy is here. Devices are monetizing data for their users all over the world. Tokenized robots are generating revenue for token holders. The first machine economy free zone is live in the Emirates, and it's all happening on Peak, the machine economy computer. Head to peak.xyz to find out how you can benefit from the age of automation, or click the link in the show notes to find out more. Shout out to today's sponsor, Katana. Katana is a DeFi first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion cat campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Welcome back, everybody. Most recent comment here is, how are you two looking at how to invest in space exploration? I mean, there's only one stock that I'm long, and that is RKLB. So for those of you that don't know, if you don't follow the private markets, SpaceX about 2 years ago was trading at 70. You could buy it on the secondary market at like 77 billion. Today, you want to take a guess what it's trading at?
What's it trading at?
800 billion.
It's a lot of billion.
A lot of billions in that. I think that it's very tough, unfortunately, to make a lot of money in this, because basically all of the best stuff is private, and also all of the best stuff is just SpaceX. Like SpaceX is kind of the trade, and I think that trade has already, I don't want to say already played out, but it's for sure not as juiced as it could have been otherwise. I think this is a fool's errand. I personally invested in an SPV about a year ago.
What's the point? Like, why invest in this theme? To me, it just seems like an
asteroid mining, my friend. Rare earth minerals on asteroids. I'm actually dead serious. At some point in the next 10 to 15 years, we will be able to go and extract resources from space and bring it back.
I have no idea. And basically the way that I look at these things is I think that Bitcoin's going to 10x with a max downside of 30 to 40% at any given time, with that level of return to expected volatility. My bar over the sort of like space exploration, humanoid robotics, like basically any theme that's not connected to traditional valuation metrics, like price to earnings,
could potentially 100x.
You think SpaceX could 100x?
I don't think SpaceX could 100x, but I think, well, RKLB could 10 to 15x.
Okay, 10 to 15x, sure.
And I think that humanoid robotics
that
could 100x. So, for example, I made an investment in a company called Aptronic at I think a $1.2 billion valuation. I think it could 100. I think that could genuinely 100x.
So basically, you're just going on. Where are you getting these investments? Second market or Forge?
So, it's mainly through SPVs that are being raised to invest directly. Because I think that there's a huge amount of appetite right now for investing in robotics companies. I think that we're probably gonna we may have already hit peak in terms of private investments in robotics companies, because one thing that is just a general truism in the markets is that supply comes out to meet demand. You saw this with startups. There was a tremendous amount of money that post Facebook and post all of these tech startups was raised by VC funds to go invest into startups to try to generate the same sort of return that Facebook had for its investors. And guess what? Silicon Valley exploded with a bunch of nonsense, because people were like, wait a second, I can tap this money. I mean, think of just like how many companies raised anywhere from $1 to $5 million to go launch the newest SaaS product to connect your dog's brain to your microwave, like whatever they're doing out there. Like genuinely, the most ridiculous SaaS products in the world have been created over the last 15 years, and it's most of them, 95% of them, completely useless. But supply was created to meet the demand of investors that wanted to invest in the tech startups. So obviously, a bunch of people. Same thing happening.
So it's basically what you're saying is for these crazy themes with 5 to 10 year time horizons, like space exploration, humanoid robotics, all this other stuff.
Correct.
So you're looking to private markets.
So you're looking at private markets, but the issue is that with robotic, so with tech startups, the big issue is that anybody can LARP, and the bar is pretty low to build a software product. Bar is way higher to build a hardware product. It's very difficult to build a hardware product.
Yeah.
With that being said, there probably will be like tons of people out there in the next 5 years that try to raise money and then just never actually end up building anything.
What's Aptronic?
And you just have to like avoid those types of companies. I agree. Anduril, I think, is phenomenal. If I could get an investment,
that's going to be $1 trillion company.
If I could get an investment into Anduril, I think that they are approaching the defense industry in the exact right way. Basically, like nobody has taken the startup mentality to the defense industry.
Palmer Luckey is kind of an inspiring dude. I recommend listening to his
podcast.
podcast.
Luckey is an insane human, like genuinely insane human, but he's ridiculously smart. I did notice that he has some. I've noticed that Twitter is rotting people's brains.
Oh, really? Social media does that?
And this happened with Elon, where he just generated all of these crazy right-wing beliefs in his head and now believes them uncritically. And it's kind of insane to see. And listening to the podcast with Joe Rogan, I felt that Palmer Luckey had a little bit of that sort of derangement.
I think he's got the ego. That's for sure. There's nobody in his life telling him no, or you can't do that, or you're wrong. I think that's part of it. I don't know if it's social media. I think it might just be megalomania.
I think that's, but he would reference things that he saw on Twitter, that weren't necessarily completely accurate. Throwing that aside, just push that aside for a second. His approach to building companies is, I think, pretty incredible. I mean, he built Oculus, then goes on
as a teenager,
as a teenager, and then goes on to say, "Look, I'm going to basically radically transform the defense industry. I'm going to figure out where all of our weaknesses are and how I can hyperscale to actually provide defense for this country that I love." It's like, okay, well, we need. I loved his point on building effectively modular weapons. He made this point where basically every tremendous amount of weapons in the United States are built in super hyper specific facilities that need to be built from the ground up exactly to the specification of that weapon. And so the ability to scale production of these weapons is very limited. And what he's trying to do with Anduril is basically say, I'm going to build weapons that share parts and can be built on basically any manufacturing pipeline. Like, I'm going to go look at all of the car manufacturing warehouses that exist in the United States, and I'm going to make sure that the weapons that we build can be built on these machines.
Yeah, like that missiles can be built in the Ford factory.
Correct. Basically. And that, I think, is something that we missed. Anyway,
I think that's genius.
I'm super bullish on Anduril.
Let's try and figure out a way to get long that. But I mean, back to crypto for a second. I still want to invest in crypto and believe in crypto. I guess I'm just, since I know that there's no hope of a short term, like in the next 3 weeks or 6 weeks, roofer in anything in crypto, our minds are wandering a bit outside of crypto. I guess I don't know. I think outside of these, like, really, here's my question. This is what I'm struggling with right now, and it's not entirely clear which path to take. On the one hand, investments like Anduril, SpaceX, maybe your Apptronic investment you want to talk about a little bit. It's kind of like these compete with Bitcoin because they have the same long-term time frame, and right. Bitcoin is liquid and amazing, and I have max conviction in Bitcoin. On a shorter term time frame, these trades don't compute. These are like, if you're buying Anduril in the private market, you're paying a 30% premium over what it's actually worth, and you're not, if you want to get out, you're getting out at a 30% discount. So the transaction costs are huge. These aren't short-term trades. Over the long run, they compete with Bitcoin. In the short run, there's this really interesting debate that we should probably address about crypto, because on paper, at least, we're crypto podcasters and crypto traders. We're just traders. We're trying to figure out where the alpha is and discuss it live with you guys.
That's cool.
But there's this really interesting debate going on CT right now, which we should probably talk about, which is, I guess Hasib and Santiago debated it, the L1 valuation. Like, is ETH a commodity? Should it be valued? How should it be valued? Santiago's saying it should be valued on price to sales, that crypto can't justify its current valuation based on the amount of users that crypto has. Most of the TAM is stable coins. Santiago's basically talking his book, but rightly so, suggesting some very real reasons why the entire crypto, the non-Bitcoin crypto space might just collapse. And if that happens, like, there's a trade there. Like, we should just get out of our fucking I can't be short anything mentality and be short if the space is about to get nuked.
No, I 100% agree. I think that the next big trade in crypto is to short all of these L1s, to be completely honest.
Short Aptos.
Like just
short
but
Sonic.
You need to, the thing with shorts is that you need to manage them very effectively. And so basically the only way that I enter shorts is when that asset is up a substantial amount prior to its most recent base.
In commodities, I would short something that was smoothly trending down and had no reason to reverse trend. Like Aptos BTC is a great pair to look at.
In crypto, you get these short squeezes
Yeah.
pretty regularly. And so, for example, I would feel more comfortable shorting. So the way that I short in crypto is if something is trading at $5 and then it goes to $2, I short if it goes back to $3. And I would short a lot more comfortable. I would feel a lot more comfortable shorting it at $3 after it's bounced from 2 to 3 than shorting it at $4.
Basically, you believe in wicks getting filled.
Because I believe that I want to short inorganic price action. And when I see that, I'm not only getting alpha from the trend, but I'm getting alpha from the inorganic price action, the short squeeze of that asset. I've been talking about doing this with WorldCoin for a long time.
Do you ever check
and the reality of the situation, unfortunately, is that flows are all that matter. And you can make an argument over and over that L1s can exist together. They're cities. They'll have monetary premium attached to it. The reality is not true. It's not true. And it's been proven out over and over. I mean, Solana has gone sideways for 5 years. It's gone up a lot in those 5 years and down a lot in those 5 years. But basically from the Pico top in 2021 to today, it's gone sideways.
Yep.
The ETH chart has gone sideways since 2020, right?
Yeah.
Or since 2021 as well, 4 years. These things, even the best, even the absolute cream of the crop, best and most used L1s have effectively gone sideways for 4 years, despite massive growth.
And they're legal now.
And they're legal now. How can anything else compete? Right?
Yeah,
and
I don't
these
know.
things actually did get some level of monetary premium associated with them. I don't think another L1 is going to be able to accomplish that. So I think Santi's can actually, I think people take umbrage with sometimes the way that he says things. But I would also, I would also get annoyed if I was constantly being berated by people that didn't understand what was going on.
Yeah, me too.
So like I don't blame Santi for that at all. But I think people took issue with the way that he said it almost more than what he was saying itself.
But he got more engagement because of the way he said it. So I understand why he
got
did.
A lot more engagement because of the way that he said it.
Basically, the reason why I agree with him is not because I think that, he's like most of you wouldn't make it at through the first round interview at a hedge fund or a private equity shop or a bank. I did. So I guess I qualify.
Congratulations, Jonah.
Thank you, Avi. I guess I can comment on this because I had a pretty elite TradFi career. I think what he's suggesting is that at a low price, when the crypto space is worth a few billion or tens of billions, you can go venture capital mode and bet on the future, and price is a multiple of the future dream state. But at multiple trillions, you should probably look for some real auditable financial progress in the space. And I kind of agree with him. And the debate that I've been having with people online is ETH a commodity? Is Bitcoin a commodity? Because people are saying it's not.
Bitcoin is a store of wealth.
So this is very interesting, Avi, because people are saying to me, oh, Santi's wrong. You can't use price to sales. That's a securities valuation metric. And look, the CFTC has classified ETH and Bitcoin as commodities, so valued on a commodities basis. I'm like,
so legalistic.
And what my response is like, that's the dumbest thing you could possibly say. It's all ETH bulls that are saying this. It's the dumbest thing you could say if you're bullish these assets, because on a commodities basis, all this crypto stuff is worthless, right? Like commodity is about supply and demand, and there is an infinite supply of tokens and a dwindling demand for like organic demand.
But like where does it, like when you think of demand for crypto, right? Like where does demand come from? Demand comes from people that want to gamble.
Yeah.
Demand comes from people that want to store their wealth in something, which is the form of gambling. And then demand comes from usage of the platform,
like gas. Yeah.
Which is effectively like that needs to become the biggest part
Yeah.
of crypto valuations, because the gambling and the store of wealth, I think, will only work for Bitcoin. I don't think you can have multiple competing currencies at that level.
Correct.
And so everything else, and that's also not the pitch of any L1. The pitch of every L1 is that we're going to be the basis for the financial
We're the world
system.
computer.
Like we're world.
Bitcoin is money. So Bitcoin, let's set it aside. Bitcoin is as much of a commodity as gold, because both gold and Bitcoin are money. And gold, people call Bitcoin digital gold. I prefer Bitcoin. Let's call Bitcoin Gen Z gold or millennial gold. It's the gold 2.0 for young people, right? You can memorize 24 words and carry billions of dollars across a border with that information in your head, right? That's kind of like a more efficient gold for young people. But ultimately, like, I don't think that I used to think that ETH was a commodity when I first got into crypto professionally. I was like, okay, you either buy it or you mine it, and then you use it, you refine it by spending it as gas, and then you like transform the commodity, which is ETH, into a useful product, much like refining petroleum, which in its native state is useless, into gasoline, which is useful, or jet fuel, which is useful. It's like, okay, you take this useless thing called ETH, you spend it as gas, and then you refine it into like a savings account or a yield-bearing savings account or a transaction that you want. So it kind of looked like a commodity. Then it went from proof of work to proof of stake, which took away one of my arguments. And now I look at it and I'm like, okay, there's still gas being spent, which is kind of commodity-like, but that's the only thing about ETH that's still a commodity. Everything else about ETH is trying to be money, like Bitcoin. And if you value it based on a commodity model, don't listen to Santi, don't do price to sales. It's a commodity. It's not a security. Okay, fine. So it's a commodity. Look at the gas being spent. Basically, circulating supply of ETH is like, it's over 100 million tokens, and less than 2% of that gets spent every year as gas. So on that basis, if you saw a commodity like oil, a lot of the oil supply is under the ground. It's not circulating supply, it's locked. And it takes a tremendous amount of effort and energy and money to get it out. But like circulating supply of oil is like a tiny, tiny, tiny fraction of the ratio of circulating supply to daily like gas demand of oil is a tiny fraction of what it is for ETH. And so on that basis, the commodity model suggests that ETH should be basically worth zero. So I don't think ETH is a commodity. I don't think ETH should be worth zero. I don't think it's a security either.
I think it's a company, personally.
Yeah, it's a DAO that sells Blockspace.
Correct. Well, and the value of the DAO comes from the usage of the platform, and is directly tied to the value of the platform, basically because there's a burn. And that's the thing that I think ETH did that was really smart.
Yeah,
is that they instituted a burn for gas. ETH can be deflationary at some point in the future if activity picks up enough to make it deflationary. The issue is that when they try to make it faster, when they work with L2s, when they introduce ecosystems like Base and Arbitrum on top of it, it actually cannibalizes that underlying value. And it makes it harder for ETH to generate return for its investors, because you're not burning the same amount in terms of fees, because the fees are going down by 100x because people are using these other platforms. And so the issue with ETH, I think, is that we haven't figured out a way in crypto in general to directly increase fees on the platform without degrading the experience of using that platform. Either you have really high fees and huge competition for Blockspace because Blockspace is scarce and slow, or you have a tremendous amount of really fast transactions and a lot of Blockspace, but fees in that case are going to come down, because the activity on these platforms is twofold. It is very needed. So there are a lot of ways to make a lot of money on ETH. And so obviously people will be able to pay a substantial amount of money to make that money. Like if you can make $1 million a year on ETH, like maybe you're willing to pay up to $200,000 in fees.
Yeah.
Right. So there's a small select group of people that will pay extremely high fees, even if Blockspace is scarce. And that was actually what was happening kind of for a few years there. ETH was generating a tremendous amount in fees because people were willing to spend $500 to get their transaction through.
Idiots were willing to spend
Right.
$500 to buy a NFT that was worth 150 ETH when ETH was trading at 4,700.
People were willing to do that.
Morons.
Today, nobody is willing to do that, and nobody will ever be willing to do that again. Basically, because Blockspace is now near infinite for people.
Yeah,
and that's really the issue, which is why I've been saying for a while, like one of the greatest trades that I see right now in the market, risk adjusted, is just going long everything that makes money that isn't facing like horrendous supply issues. Like we're talking about Hyperliquid's facing a horrendous supply issue right now. But go long anything that makes money and short all the L1s against it. And that's probably a pretty good risk adjusted trade.
Yeah. Would you short anything that loses money against Bitcoin? If you were, I saw you were worried about short squeezes. If you could verify that there isn't a lot of OI and there aren't a lot of shorts,
100%.
Then you're, like 100%. Let's just take my favorite dead horse to beat.
Go look at the chart of optimism and Arbitrum versus Bitcoin. Just go look at that.
It's smooth. I think smooth downward sloping charts are safe to short.
There's still billions of dollars to extract in shorts in this industry because these things are going to zero.
You can't have a short squeeze if there are no shorts. I think right now they're just trending lower because supply is hitting the market in spot space, not because new shorts are piling in that are going to get squeezed.
The supply thing on hype is that the teams are unlocking and seemingly selling. There was a comment, and so I was a little skeptical of this narrative. Hype is really underperforming the market right now, and so I think it's just best to sort of step out of the way, wait for things to clear, and then you can get back in. Because I do think
you sound like me now. All of a sudden, wait for it to bottom out and then start to rally again before you can get.
I think I came around to that thesis just because you got indication. Look, Bitcoin was up and hype was down. That tells you everything that you need to know about what's going on right now, which is that there's a lot of supply overhang, unfortunately. There's
also probably a lull in trading. I haven't looked at hype's burn recently, but December tends to be a quiet time, and I could see people just slowing down their,
and also just
their trading
a ton
activity.
Of new competition is coming out.
Yeah, Aster, Lighter.
It's tough out there. But I hope you guys are doing all right. Any questions? Any questions from the audience before we wrap things up?
What do you think about hype versus Lighter?
I think that Lighter is cheaper than hype, and so it's very, as long as there's liquidity, which there is right now. But Lighter is, I was looking at the volume charts, and Lighter's volume is very uniform, which suggests a lot of wash trading and not real volume right now, which is very common. I'm not saying that they're doing anything wrong. I'm just saying that it's indicative of potentially being that. And I think that a lot of exchanges do that in the beginning and then grow into real volume later. And so really the two things that you have to look at with an exchange are what are the fees that you're paying? And then what are the effective fees based on the liquidity when you're actually trading on that exchange? And right now, I think that Lighter is doing probably going to be able to take some liquidity from hype, but I don't necessarily think that's going to be a long-term thing. I think I view hype as the Uniswap. I basically view it as a Uniswap. Like there was a period of time where Uniswap performed very poorly because all of these other DEXs came out and competed with Uniswap, and Uniswap went down, and all these other things went up, like SushiSwap, and then 2 years later, Uniswap is still around and these other things aren't. And that's what I think is kind of what's happening with hype now, is that we might find ourselves in a 6 to 12 month period where hype will underperform as they run these zero fee programs and they run incentives. And once those incentives and zero fees run out, hype still has, I think.
Same thing's happening with Aerodrome, actually. I think all of these things, hype, Aerodrome, they're a good dip buy if you believe in the long-term thesis, which for hype is like, hey,
the issue is it could go down like 60%.
Yeah, I know. So wait for it to bottom out and then start rallying, because we're not in a bull market for altcoins. We're in a raging bear market for altcoins. But like, just speaking of the bear here, but like basically, we're in a market where, like, obviously long-term in crypto, a perp DEX with no KYC has value, especially one with traction like Hyperliquid. In a long-term crypto scenario, getting long basically a proxy for transactions occurring on Ethereum, which for me is the Aerodrome token, Aero, That's a good idea. You just can't catch the falling knife. So once the knife stops falling and you get huge, like to your point last week, huge volume bars and then crickets, and then it starts to tick up a little bit, that's when you can start to feel comfortable probably buying hype and buying aerodrome. These longer term themes. So somebody else just above was asking, what's the best career path in crypto? And I think that's a really relevant question, because there's this guy on Twitter who published an essay. I just wasted 8 years of my life in crypto. I don't know if you saw that. Did you see that?
No, what was this?
Basically, he's a guy who tried to create some kind of like perp trading engine. It didn't work out. The token it's called AVO. The token just went down only. And now he's rage quitting crypto, and basically published this essay. Like many people in crypto are feeling, even, OGs are publishing this essay by selling their OG Bitcoin. He published an essay. He basically said, I think Bitcoin's going to 1 million, but I don't believe in the space anymore. I used to believe in the Ayn Randian, libertarian ideals of decentralizing finance, but now it's just turned into one big casino. And all I did was help perpetuate gambling and extractive transaction fees. And I wasted my life. I made a lot of money, but I wasted my time, basically pushing towards an ideal that is flawed. And I guess with that essay out there, it went super viral. It got like 2 million views, which is a lot for a post about crypto.
Yeah. But he said he made a lot of money.
Yes. And he also said Bitcoin's going to 1 million. So he's still bullish. He just doesn't believe in the ethos of the space anymore. So to this, Simon Shockey's point here, what's the best career path in crypto? Against that backdrop, what would you recommend to people interested in working in crypto? Is there a career path in this space, or is it just buy Bitcoin and do something else?
I think that there are really three things that you can do here. You can either be an investor and you can be an active investor. You can be somebody that wants to go into that, you want to trade, or you want to be a VC investor, or you want to get active as a professional investor in crypto. And that is a career path. The other career path is being a builder, which is you think, okay, I'm going to go join a company or start my own company, or I'm going to try to build a product in crypto. And what I would suggest to everyone going down that path specifically is think of it like, don't compare crypto to crypto. If you want to go be a builder, look at the full broad set of tech companies, look at the full broad set of startups that you could possibly join.
The whole opportunity suite.
The whole opportunity world in terms of AI, tech, crypto. Look at all of that and try to figure out a role that you would enjoy. Don't necessarily pigeon yourself into
not like, crypto. Crypto's ripping, so I need to build mortgages on chain.
Correct.
Or, somebody built a successful DEX on ETH, so I'll build one on Near. Yeah, exactly.
And then the third thing is do something else with your life, and then just invest in crypto because you believe in it, and just put your paycheck in every now and then. And that's, I think, where today I would probably lean if I was like, I would lean that way if you already have a career. If you already have a career, go down that path. If you don't already have a career, if you're 19, if you're 20, if you're 22, go take that risk. Like, go try to be a builder. If you want to be an investor, my best advice to you is to just start writing articles on Twitter. If you listen to this podcast, you write an article, I read it and it's good, I will retweet it, I will hype you up. Like, I'm happy to support you.
Same.
Like, go just put your thoughts out there. The best way to figure out if somebody's intelligent is if they have a well-maintained Substack or a well-maintained Twitter, and you read it and you think to yourself, wow, this person has original thought. This person is a real thinker. That is the best way to get hired and actually start a career. And you can do that early. I started a newsletter when I was 22, right out of college. That newsletter ended up getting 20,000 subscribers, and that's how I jump-started my entire career in crypto. It's because people were like, oh man, this guy's not stupid. I don't think they thought I was smart, but they thought I was not stupid.
That's a common story, actually. Like, the week you were out on your personal leave, we had Max Bronstein podcasting, and I think he started writing for Bitcoin Magazine.
Yeah, like he did. Yeah.
It's a pretty common path. So yeah, writing is the path to being a professional investor. I would say if you're going to build in crypto, you basically have to assess, again, Santiago, regardless of his phrasing of things, has influenced my thinking on this. You basically have to assess whether or not crypto beats the existing solution.
Correct. You just have to look at it as, am I joining a good company?
Yeah.
Like, does this company have competitive edge? And
Yeah.
crypto is part of that competitive edge. Or I guess what you can do, Bagshira Capital, scam, be early, or scam.
Scamming is definitely something you can do in crypto.
Scamming is definitely very lucrative. There are a lot of scammers out there. I wish I want to do a podcast one day. We're wrapping up on this one, but I want to do a podcast one day, Jonah, where we just like expose the underbelly of the scamming world of crypto.
Oh yeah,
there's a lot there. I just don't want to be killed.
Yeah, me neither.
It actually like frustrates me a little bit because there's so much nastiness in the deep, like Zcash is up 21% today. I think it probably has to do with crime.
There's nothing, no other conclusion.
Like it's like not improbable. There might be an overlay of, oh, this is the reason why I moved. That's the reason why I moved. The reality is it probably moved because somebody just like scored a big hack.
Yeah.
And just like shoved maybe shoved $30 million into Zcash because they're trying to hide that hack. This stuff happens all the time.
I mean, yeah, it's either a hack.
It's also a point to be bullish on Zcash is that now that it's in the public consciousness, every time there's a large hack, people are just going to shove their money into Zcash.
Getting long crime is a great trade.
Unfortunately,
crime's never going to stop. Quick hot take, Jonah. What about the quantum threat? There is no quantum threat. As soon as that happens, the Bitcoin developer community will just fork Bitcoin to a post-quantum algorithm, and that's enough. Enough of this. Like
we need to do
shit.
it in advance, but yeah.
Or even after it happens, like you can just fork it to a post-quantum world, and oh boy. Yeah, maybe that's a sign that it's time to go.
I think it might be time to call it. we're getting the hook.
We're almost at 6,000 viewers. Thank you all for tuning in. Love you all. This is great.
Yeah, we appreciate all you.
In IRL is better than online sometimes, Avi.
This is great. See you guys.
See you later. Nothing said on the 1000X podcast is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.